Hello everyone and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infinox on Wednesday the 14th of December. Now, we've had the US CPI data. That was the first of several key tier 1 data announcements this week that are likely to drive significant volatility, and the volatility we got off the CPI was huge. I'm going to be looking at euro dollar, looking at the gold chart and looking at S&P futures. So straight into it with this euro dollar chart. Well, what we saw was this CPI for the US coming in lower than expected. That has again meant that expectations of a less hawkish Federal Reserve has just exploded once more, and we saw the dollar selling off quite sharply. We saw that move yesterday. We've seen the breakout on euro dollar moving higher above the resistance at 105.95. That was a key moment. That is just the next leg higher in this break move towards what ultimately looks to be, I think, a test of these key May highs. That's the old support and the new resistance around 107.85, that key May high. Now, what we have also done is broken this primary downtrend. This is a downtrend that goes back to mid-2021. So looking at sort of 18 months worth of downtrend that we've now broken on this recovery now on euro dollar. We've got the strong momentum, we've got the breakout, higher lows, higher highs, continuing the recovery. We've got the Fed meeting today. Now, this CPI data should mean that the Federal Reserve does not need to be as hawkish as it has been. We're likely to see 50 basis points, but also possibly lower Fed dot plots, maybe lower inflation forecasts as well. So that could mean that we see further dollar weakening, and that breakout on euro dollar continues the run. So look at the technicals, slightly overstretched, but I don't think on euro dollar that makes too much difference certainly if the Federal Reserve is less hawkish tonight, and that would be the key risk. So the fact that the RSI is at 70 doesn't necessarily mean it's restrictive. I think we're still trading this strong trend. So any weakness, I think, in euro dollar near term is a chance to buy. You've got this uptrend on the 4-hour chart here. We've got the basis of the breakout supports that are basically around that uptrend that come in around 105.50 up towards 106, big figure effectively. But I think anything breaking back above yesterday's reaction high, which was 106.46, anything above that, you're looking at the moves towards the 107.85 area. Moving on to the gold price, well, we have seen the similar recovery, not as sharp on the gold price, but we have seen the similar recovery. We also saw the breakout above resistance at 18.10, that reaction high that we saw back a couple of weeks ago. That was the resistance, and we saw a breakout above that, just a slight pullback, but it's closed above that breakout and also is holding the break this morning. I'll go out one more level and we can see the importance of this. This was the big double bottom base pattern that implied 1844. It still does, still implies that target of 1844, which is around about here. And having broken out now decisively above 1810, the next resistance of real note comes in at 1860 to 1875 area. So yeah, there is further upside in this move. Certainly, again, if the Federal Reserve is less hawkish, that will help the gold price, and that will weaken the dollar, help gold moving higher. So we've got all the conditions in place, positive technicals as well. Any weakness is a chance to buy. You've got the nice support, good support now, 1777, but essentially anything around this sort of old breakout band, 1790 up towards 1810, any weakness into that is a chance to buy, I would say. Below 1777, you lose some of that positivity, and below the next reaction, though, 1765 would be then confirming sort of a disappointment move. But certainly for now, we're still looking at upside on the gold price. And finally, on the S&P futures, well, this is an interesting one because we had the recovery from the October lows, and then you saw the market just consolidating for a month, basically. And it's broken the recovery uptrend. And again, you had that move yesterday on the CPI. It sort of had a bull failure, effectively, on the breakout. And the breakout also above the downtrend. And this is a big downtrend. Now, you look at the Dow futures, for example. The Dow futures have completely cleared that equivalent downtrend and are looking positive. But S&P futures, just a bit disappointing, really, yesterday. I mean, I think we need to just play this a little bit cautiously. US equity markets, there's still talk of the fact that US equity markets could ultimately just roll over again. So I think it's something just to be a bit more cautious of. Closing breakout above 4106 would be the bullish move, and we haven't seen that yet. Now, momentum indicators are positive on US futures without being outright bullish. I'd say the fact that the RSI struggles around the low 60s is a little bit of a concern, but yeah, it's something that I think it's a handbrake on move, really. And essentially, we're still sort of trading in this sideways range. So I'd say I'm looking out for what happens in the wake of the Fed tonight, really, and then whether there's a sort of Santa Claus rally into the end of the year. But just for now, I'm just a little bit cautious. The reaction though yesterday the Fed move was entirely retraced, and then it's just started to creep higher. CPI move was entirely retraced. So 3992 initial support, but yeah, I'm still sort of cautious in front of the Fed, I think, on this one. So with that in mind, I wish you good luck in your trading, and I'll speak to you soon.